Top retail stocks have already lost 70%. Why S&P 500 is about to plunge in March of 2023. Thursday's sell-off has been brutal for any bull in the market, especially if you own tech-like semiconductor stocks or Tesla stocks. Tesla stock was down as much as 11% during the day, dropped below $400 billion mark. A lot of retail investors probably got margin called because it feels like panic selling. I mean, from 128 to 122 only took an hour of selling. People that bought Tesla back in the day at pre-split, $4.20 a share, are now underwater. Some of them bought it on margin, meaning they borrowed money from their broker. When you deal with a broker, if you are not careful, they will make you broker. From a golden millionaire to a thousandaire. What actually triggered this sell-off? Why is TLT staying flat? While S&P 500 was down 2.7% at some point. I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? The U.S. stock market has lost 11.7 trillion in market cap from its January high of 2022. U.S. stocks were sharply lower and the dollar gained ground as solid economic data exacerbated worries that the Federal Reserve's monetary policy would hover at restrictive levels for longer than many market participants may have hoped. All three major U.S. stock indexes tumbled, extending their losses as the morning progressed, with interest rate sensitive mega caps weighing heaviest on the tech-laden NASDAQ. The flight to safety helped bolster the greenback against a basket of world currencies. With the penultimate week of a dire year drawing to a close, hopes of a Santa Claus rally in the last days of 2022 are fading as investors prepare to close the book on the worst year for the stock market since 2008. The nadir of the Great Recession. 2008 was a horrible year with a lot of job loss, which made things worse. That bad market followed you home. This has been concentrated in a way that is what makes this unique. There's nowhere to hide. The pain is more widespread. That's made this market feel more desperate. Data released before the bell showed an upward revision to GDP and relatively lower claims for unemployment benefits. While such data would normally be viewed positively, amid the central bank's tightening phase, it fuels fear that the Fed funds target rate could rise higher and stay there longer than previously expected, raising the possibility of an economic contraction. Looking forward to the new year, the light at the end of the tunnel will make 2023 better for stocks than the economy. Or is it? It's been the best telegraphed recession ever. Big tech's fall from grace has been one of the abiding market themes of 2022, but the earnings outlook, macro backdrop, and valuations offer little support for the big turnaround in 2023. After the worst year since the global financial crisis, the Nasdaq 100 has plummeted more than 30% this year, lagging the S&P 500 as the Federal Reserve and other central banks aggressively hiked rates. Surging bond yields made highly valued tech stocks look less attractive. This value destruction has made so-called FANG stocks, such as Amazon.com and Apple, less important to the S&P 500, as some lost more than a third of their value. Now, inflation and monetary tightening have raised the prospect of a global recession. If the U.S. economy contracts, technology stocks will face a drag from lower corporate earnings. The Nasdaq's 12-month forward EPS has dropped more than 4% from the start of October through December 16th. Compared with about 2.7% for the S&P 500. Another measure shows Nasdaq 100 EPS year-over-year growth has fallen to almost zero. Big tech earnings also don't command the premium they used to versus bonds. The spread between the Nasdaq 100's earnings yield and the 10-year Treasury yield narrowed to the least since 2009 in October. Tuesday's premium of about 49 basis points is well below a 10-year average of around 191 basis points. This makes tech stocks less attractive, even if the Fed slows tightening. Inflation may be decelerating in top-line economic data, but that doesn't mean it has fully worked its way through future earnings, especially with the sense that some behemoths have reached peak growth. Amazon projected the slowest holiday quarter growth in its history and is cutting jobs. Subtracting still elevated inflation from the Nasdaq 100 earnings yield leaves the real stock yield negative, although improving and well below a 10-year average. Tech is often seen as a long-duration play, yet has been unable to benefit from bonds' horrible year, with bond traders betting on rate cuts in 2023, despite the Fed's hawkish messaging. Long-dated treasuries like TLT could get a bid, further weighing on stocks' relative attractiveness. Valuations are a mixed bag. The Nasdaq 100's 12-month forward PE of about 20.3 is in line with the 10-year average of 20.5, while the Nasdaq 100 is nowhere near the valuations seen before the dot-com bust. In 2002, valuations fell below 20. With the prospect of both an earnings and an economic recession, it's conceivable there's still froth to be shaken out. Bernstein noted this week that tech is trading at a 29% premium to the market, down from a November 2021 peak of 52%, but still above its historical average of 25%. The technical setup is not supportive for the Nasdaq 100. The gauge has been under its 200 DMA for the longest period since the tech bubble. It's also testing a long-term uptrend in place since 2008 and has failed to overcome a technical downtrend that's been in place since the start of the year. To be sure, the Fed could engineer a soft landing and earnings may hold up. Companies tend to be beat. If, however, the economy holds its pose, earnings may not be affected, but then the Fed would be less likely to cut rates, which won't augur well for stocks. Tech's 2023 may not be the nightmare of 2022, but its era of stellar growth has stalled, if not ended. Why market sell-off this morning? Final Q3 GDP growth rate, which came in even hotter than previously expected, rising at a 3.240%, above the 2.930% estimated 1 month ago, and well above the 2.57% initial estimate reported in October. Mostly on the back of another upward revision in personal consumption. A better than expected GDP print was just the kind of good news that the stock market bulls didn't want to hear this morning, because it signaled inflation is high. That's why TLT is staying flat. Because central banks around the world are tightening, and traders should not ignore what the central bankers are saying. Rates will remain higher for longer as global central banks fight inflation. That proves stubborn. Wages and labor supply. And the market is not pricing that in at all. The market is not buying the Fed's increasingly hawkish position that they are going to raise rates to a higher than expected level to keep them there. The hypocrisy of traders fight the Fed now after a decade of following them sheep-like. I believed the Fed before, and I believe the Fed now. Sometimes they tell you what they're going to do, and you have to believe them. If you only believe them when the market is going up, and you don't believe them when the market is dropping, then you just behave like a child. In the short term, there is still hope of a Christmas rally based on how it closed on Thursday. But as soon as S&P 500 broke 3,500, we are going to crash like we have never seen before. And my client Taddy Eazzy's Wicked Pussy Perfume book. It is an erotic novel, such an awesome book. Order your copy for Christmas. And my clients David, Vine, and Jema, and it's Ignite the Passion, Co-Create Your Dreams, such an amazing book. You are such a good boy for watching my video right till the end. Bye.